A man in Ohio is paying $900 a year more on his homeowner's insurance than his neighbor across the street, and the only difference between their two houses is what is hidden inside the walls. The insurance industry has quietly built a pricing system that punishes you for the wiring your home was built with in 1965, and they are counting on the fact that you will never figure out why your premium keeps climbing. But a small and growing number of American homeowners have discovered a specific upgrade that triggers a rate reclassification, and they are using it to permanently cut their insurance bills by hundreds of dollars a year. The hidden tax living inside your walls. If you own a home built before 1980, you are likely sitting on a financial trap that nobody warned you about when you signed the closing paperwork. It is not the foundation. It is not the roof. It is the wiring. Every year, your insurance company runs your address through an actuarial model. That model looks at the age of your home, the year it was built, and the electrical system it is likely to contain. And if your home was constructed before a certain threshold, the algorithm adds a surcharge to your premium, not because your house has been inspected, not because anything has gone wrong, but because statistically, older wiring systems have a higher probability of causing a fire. The insurance company is not wrong about the risk. We will get to that. But what they do not advertise is the other side of that equation. The same actuarial model that raised your premium can lower it dramatically. If you make the right upgrade and document it correctly, your home gets reclassified. The surcharge disappears. And in many cases, homeowners are seeing reductions of $300 to $700 per year, every year for the life of the policy. That is not a one-time rebate. That is a permanent change to the underlying cost structure of owning your home. But here is the problem. The insurance industry does not send you a letter explaining this. Your agent does not call you to say there is a way to cut your bill. That is not how this business works. You are supposed to keep paying the surcharge forever and not ask questions. The people who discovered this loophole did so by accident, by digging into their policy documentation, by talking to electricians who had seen it happen in other homes. Today, we are going to walk you through exactly how this system works, why your old wiring is being taxed, and the specific upgrade that breaks the cycle. The 3 wiring crimes they hope you never inspect. To understand why the insurance industry is charging you more, you need to understand what is actually hiding behind your drywall. There are 3 specific wiring systems in older American homes that the insurance industry has classified as high risk. Each one has a different failure mode. Each one is a different kind of financial grenade. The first is knob and tube wiring. If your home was built before 1940, there is a significant chance this is still running through your walls. Knob and tube is exactly what it sounds like. It is a system of individual copper wires strung between ceramic knobs and threaded through ceramic tubes where they pass through wood framing. There is no ground wire. There is no sheathing holding the wires together. They just run naked through the structure of your house, separated by air. When this system was installed, it worked. The homes were uninsulated, and the air gap around the wire acted as a cooling mechanism. But what happened over the next 80 years is the problem. Homeowners blew fiberglass insulation into their attics and walls. That insulation buried the knob and tube wiring. The wires, which were designed to dissipate heat through open air, are now wrapped in a thermal blanket. They overheat. The old rubber insulation around the copper becomes brittle and cracks. And a wire that is touching wood framing with cracked insulation is not a fire hazard. It is a timer. The second wiring crime is aluminum wiring, and this one is more insidious because it was sold as a modern upgrade. In the 1960s and the 1970s, copper prices spiked. Builders and electricians switched to aluminum wire as a cheaper alternative. Millions of homes built between 1965 and 1973 were wired entirely in aluminum. Here is the engineering problem. Aluminum expands and contracts at a different rate than the copper terminals on your outlets, switches, and breaker connections. Every time you run a load through an aluminum wire, it heats up. Every time you shut off the circuit, it cools down. Over decades of thermal cycling, the aluminum pulls away slightly from the terminal. The connection loosens. A loose connection creates resistance. Resistance creates heat. Heat creates fire. This is not a theory. The Consumer Product Safety Commission published a report showing that homes with aluminum wiring are 55 times more likely to have a wire connection reach fire hazard conditions than homes with copper wire. 55 times. Your insurance company's actuarial model has read that report, and they are billing you accordingly. The third problem is the overloaded panel. This is the crime of a different era. A home built in 1950 was designed around the electrical load of 1950, a refrigerator, a few lamps, a radio. Those homes were often wired with a 60-amp service panel. Today, that same home might have a central air conditioner, an electric dryer, a dishwasher, a hot water heater, a chest freezer, and a car charger in the garage. The panel was never designed to handle that load. Homeowners and previous owners have doubled up breakers, run extension cords as permanent wiring, and installed higher amperage breakers on circuits that cannot support them. The result is a panel that is operating at or beyond its design limit every single day. When an insurance underwriter looks at a home with a 60-amp panel built in 1952, they are not just seeing old infrastructure, they are seeing a fire waiting for a trigger. How the insurance industry turned old wire into a cash machine. Here is what they do not teach you when you buy your first home. Insurance premiums are not fixed prices based on the cost to rebuild your house. They are risk scores. Every feature of your property runs through a model, and that model assigns a cost weighted by probability. The older the wiring system, the higher the fire probability, the higher the risk score, and the higher the premium. This is standard actuarial practice. But what most homeowners do not realize is that the same model works in reverse. When you replace a high-risk wiring system with a modern code-compliant copper installation, your home's risk profile changes. The actuarial model that was charging you a surcharge now sees a different house. Not an old house with dangerous wiring, a structurally older house with brand new electrical infrastructure. The fire probability drops. The risk score drops. And if you document the upgrade correctly with a licensed inspection and a certificate of completion, you can submit that documentation to your insurer and formally request a rate reclassification. Some insurance companies will initiate this process automatically after you pull the permit. Others require you to call and force the issue. But the reclassification is real, and it is permanent. What makes this a loophole is the information asymmetry. The insurance company knows your old wiring is triggering a surcharge. They built the surcharge into your policy at renewal, buried in the underwriting notes. They are not obligated to tell you it exists. They are not obligated to tell you it can be removed. Most homeowners pay that surcharge for decades without ever understanding what they are paying for, or that there is a specific action they could take to eliminate it. In states with active homeowner protections, insurance commissioners have started requiring insurers to disclose wiring-related surcharges in plain language. But most states have no such requirement. You are on your own to figure out the system. The smart money figured it out. The loophole. How one rewire changes the math permanently. Let us do the math the way a homeowner with a long-time horizon should. A full electrical rewire on a typical American home built before 1980 costs between $8,000 and $15,000 depending on the square footage, the age of the structure, and the complexity of the existing system. That is real money. Nobody is pretending otherwise. But here is what that number looks like when you run it out over time. If your current policy carries a wiring surcharge of $500 per year, which is conservative for a home with knob and tube or aluminum wiring in most major markets, a rewire that eliminates that surcharge pays for itself in 16 to 30 years on the insurance savings alone. In high-cost insurance markets like Florida, California, or Louisiana, where older wiring surcharges can run $800 to over $1,000 annually, that payback period drops below 10 years. And that calculation does not include the other financial consequences of old wiring. It does not include the cost of a fire. It does not include the reality that in some markets, insurance companies are now refusing to renew policies on homes with knob and tube entirely, leaving homeowners in the surplus lines market paying 2 or 3 times standard rates. It does not include the fact that a home with documented modern wiring sells faster and appraises higher than a comparable home with flagged electrical. The rewire is not an expense. It is a financial instrument. You are buying a permanent reduction in the cost structure of owning your home. You are eliminating a recurring tax that you did not know you were paying. And you are removing the risk that your insurer drops you entirely when they re-inspect the property. The homeowners who are figuring this out are not wealthy. They are not doing it because they have extra money sitting around. They are doing it because they ran the numbers and realized that their old wiring is one of the most expensive things they own. Now that you understand why the rewire matters, you need to understand how to do it correctly. A rewire done wrong does not trigger the reclassification. It just costs you money. The first rule is permits, non-negotiable. Any electrician who tells you they can do the job without pulling a permit is telling you they are willing to perform work that will never be inspected and will never be documented. An undocumented rewire is invisible to your insurance company. You cannot use it to request a reclassification. You spent $10,000 and you are still paying the surcharge. Pull the permit, require the inspection, get the certificate of completion in your name. That document is the instrument you will use to trigger the rate change. The second rule is material. You want copper wire, not aluminum. We already covered what aluminum does to your connections over decades of thermal cycling. Do not let a contractor talk you into running new aluminum to save money on a partial rewire. The entire point of this exercise is to get the wiring risk surcharge removed. If you install new aluminum, the insurance company's risk model may still flag the property. Use copper. Use it throughout. The third rule is the panel. If you are rewiring the branch circuits and leaving the original 60 amp or 100 amp panel in place, you are doing half the job. A modern home needs a minimum of a 200 amp service panel with room for current loads and future loads, like an electric vehicle charger. A new panel costs more upfront, but it is the element of the upgrade that is most visible to the insurance underwriter. A new 200 amp panel on a documented permit is the clearest possible signal that the electrical system of this home has been modernized. On the contractor's side, there are 2 types you will encounter. The first is the licensed master electrician who has done this work hundreds of times, who knows how to route new wire through finished walls with minimal damage, and who understands the permit and inspection process in your specific municipality. This is who you want. The second type is the handyman or the unlicensed contractor who will offer to do the job for half the price and leave no paperwork behind. This is the contractor the insurance loophole does not work with. You cannot reclassify a rate with work that has no documentation. All you have done is renovate your walls. Get 3 quotes from licensed master electricians. Ask each one specifically whether they have experience with full rewires on pre-1980 homes. Ask them about the permit process. Ask them what documentation you will receive at completion. If they cannot answer those questions clearly, they are not the right contractor for this specific job. The verdict. Here's what is actually happening in this country right now. The insurance industry has built a system that charges homeowners a recurring tax for the infrastructure they inherited when they bought their house. It is hidden into the language of underwriting notes and actuarial tables. It is not disclosed clearly. It compounds silently for decades, while the homeowner assumes they are just paying the market rate for coverage. The corporations that manage these risk pools are not evil. They are correct that old wiring carries real risk. But the fact that they have built a reclassification mechanism and chosen not to advertise it to their customers is a deliberate business decision. Your ignorance is worth money to them. Every year you do not make the upgrade, they collect the surcharge. Every year you do not ask the question, they do not volunteer the answer. The homeowners opting out of this system are the ones treating their property like a balance sheet instead of a lifestyle. They are the ones who looked at their policy documents, found the surcharge, found the escape hatch, and ran the math. A rewired home is not just a safer home. It is a cheaper home to own, year after year, for as long as you hold the deed. It is a more insurable home in a market where carriers are increasingly walking away from older properties. And it is an asset that has removed a recurring liability from its cost structure. Stop paying the tax for wiring you did not choose. Stop letting the insurance model run unchallenged. Get the inspection done. Pull the permit, run the copper, and send your insurer the documentation that forces them to run the new numbers. The most expensive wire in your house is the one you never updated.